Welcome to TheoTRADE. This is Don Kaufman. It's November 8th, 2024. Just about 20 minutes to go to the cash close here on this Friday afternoon. The S&P's up mildly. Okay, we're through the euphoria. And I got to tell you, moving forward, this is all going to be about like this bond vigilantes versus what? Well, post-election profits. Let's get right down to business here, of course, on this TheoTRADE weekend update. So the S&Ps, explosive move to the upside. Like, look, I'm stating the obvious over here. In terms of the SPX, how did it actually fare on the week? We're going to jump right into this here. Well, how did it fare on the week? Well, we started the week in and around, and again, I'm just going to label this really quick. We started this week in and around, and again, this is the SPX, right about 57.28. Right now, well, roughly trading about 6,000. So what do we have over here? Well, that is almost a 300-point move to the upside. Expected move this week was about $150. So you're sitting right on the cusp, if you will, of almost a 2 standard deviation move. And for those of you that are not complete and total trade geeks, what I'm actually talking about is the option marketplace. Okay, the option marketplace was looking for this $150 move, $150 move to the upside, $150 move to the downside. What did it got? Almost a $300 move. So we are well outside what was anticipated. And what's interesting about that, and by the way, we caught a couple of really nice trades on this particular front. One of them, which was inside of the spiders. And I got to tell you, I closed this one a little earlier than I probably should have, okay? But nevertheless, okay, I actually had a back spread in here that I opened for a 98-cent credit and closed for like an 80-cent credit. So, boy, I've kept that one on for a couple other days. Hindsight is always 20/20, but look, still had a wildly profitable back spread in here, looking for that explosive move to the upside. So you get this euphoric jump in the marketplace. And first of all, I am a little bit surprised of how significant the move was. And you say, well, why are you surprised? Because the marketplace, in my opinion, was, at least in the dollar was like largely pricing in, okay? And we talked about this, over 2 weeks ago. It's almost 3 weeks now that the dollar was actually pricing in what was going to be a Trump victory. I mean, it's without unequivocation, of course. In hindsight, it looks perfect. No, we talked about this, right? And we talked about the fact that the bonds were actually selling off in anticipation, again, of a Trump victory. And those were, two of the biggest election trades, if you will. And I was a little taken back about the violence, if you will, to the upside over here. But a lot of the trade, yes, the financials exploded to the upside. And again, if you look at the expected moves, the financials like almost a 2 standard deviation move. And that's like, what I would term like a deregulation trade. But it's interesting because I didn't see this one coming. Like this wasn't being priced in prior to the election at all. But the market this week, yes, the financials ripped to the upside. And with that, you actually saw the Russell explode off of that. I mean, because your regional banks were into some of the financials, clearly. But what really carried the S&Ps? Okay, I mean, Tesla's a big portion of it, hands down. I mean, Tesla was a stock that, started this week. It was basically flat on the year, 30%. Okay, 30%. I just want you to understand. So what? It's 30%. Yeah, it's 30% on a $1 trillion market cap. It added $300 billion of market cap throughout the course of this week. Then you look at stuff like Nvidia. It too kind of ripped to the upside. Again, the reason I was kind of taken back, and by the way, Apple not participating too much to the upside over here. Amazon, explosive moves to the upside. Again, my surprise, okay, is what really did take place after the election. And yeah, again, there's no denying that, oh, we ripped to the upside. My surprise though was a lot of it was in fact tech. And I sat back and thought to myself, and I'm still thinking to myself, is tech really the beneficiary of a Trump victory? And I have a tough time saying yes, other than, hey, maybe, the whole economy is okay. All right, I got you. Maybe it's Nvidia because the AI trade is going to happen, but a tough time with it. I mean, Tesla makes a hell of a lot of sense. Everything else, okay, and Tesla, it makes a lot of sense, but it's probably an overblown animal in here, okay. But a lot of the other tech companies, I have more questions than answers on that particular front. And that's exactly why, again, you're going to see me positioning myself in a moment and talk about this, right? So again, there's a bit of euphoria. The election is over. Now, with that going on, okay, we had volatility get crushed down, to be expected. Now, the vol got crushed. Long live volatility. At this point, okay, I have a volatility position on, and I took a volatility position, and I'm actually going to show you it's not a trade that's going my direction right now. It's okay. Took a volatility position where I bought the 25, sold the 35s. I'm in a spread. Okay, it was a very nominal trade. It was not expensive, and I've had it on now for a few weeks. So let's go back and actually back a couple of trading sessions over here. Oh, it's even back on. Here we go. So I only paid like 60 cents for this volatility position, which is, again, it's negligible. And by the way, it's still worth, 20, 25 cents at this point. So we've lost just over half the value in that volatility trade. Okay, that's 39 days out in the VIX. I'm actually going to look to amp up a little bit of a volatility position at this point. And I'm letting everybody know that because why? As I said, volatility got crushed. Long live volatility. Well, you think this thing is going to be over? Just over and done with. Don't worry. We're going to be euphoric. We're just going to rally into year end. Okay. It's the Santa Claus rally's coming. There's still, okay, the big conversation piece, which we're getting to in a moment. All right. Which is going to be bonds. Now, I'll reserve that for a moment. So I'm looking at another long volatility position. All right. So as I was saying a moment ago, what drove a huge amount, all right, of the trade this week? Clearly Tesla. And I cannot stress this enough as Tesla flies into the stratosphere, okay? Nvidia gets added to the Dow. Speaking of Nvidia, take a look in terms of auto expected moves. It cracked the upside of the expected move, but the move in Nvidia is not per se unruly. It's fairly controlled movement. It's not as crazy, not nearly as crazy as some of the Amazon move. Okay, Amazon obviously having a much more significant move to the upside. But as I said to you, I am very surprised that tech rallied as much as it did. Okay, and that again, the financials, it makes sense. Again, deregulation and so forth. Okay, big jump to the upside, but this is not really the apple of my eye. It's looking at underlyings like, if you will, Apple, which taking a look at auto expected moves, recognize that Apple completely underperformed throughout the course of this week. By the way, I also, inside of a catapult, took a short position in Apple here simply because of that, magnificent, if you will, underperformance in this week, a euphoric week to the upside. Apple barely even hit the upper edge of its expected move. And that's the kind of stuff I pay attention to. Google, also a little bit of a surprise. And I say a surprise. Wouldn't you think Google, which is already, under investigation for, monopoly behavior, Department of Justice investigation, I would think that this might not perform nearly as well, and yet still lifted substantially. There's going to be some interesting positions to take, in the days and weeks to come, as again we kind of get sorted through, the winners and losers, obviously in this post-election profitability. Now, onward. Let's talk a little bit about the Fed. There's nothing to say. Cancel Fed. The Fed didn't make really any bit of difference. Now, in terms of the Fed, yeah, the Fed came out on a Thursday. The marketplace did rally, but like, look, people, we were already up. I mean, the S&P futures, okay, were already elevated substantially prior to, okay, the Fed. I mean, after the Fed, a couple of points, we just, trickled to the upside. But again, and this is yesterday's trade, and most of yesterday's trade, we were already up before the Fed, okay? The marketplace just kind of moderated thereafter. I mean, over and done with. There was nothing more to say about that. What you really want to pay attention to, though, is that the bond market right now, it is bid. And what that basically means is there's been some wild sell side activity inside of the bond market lately. Last two trading sessions, bonds are bid. Now, again, I want to reiterate something about the Fed. Take a quick glance back, okay, at yesterday's trade. The Fed, if it moved anything, okay, it did move the bonds to some degree. Again, if it moved anything, the Fed did see a little bit of a bump higher in bonds, but we're talking such, okay, a nominal amount. The bonds had already rallied prior to that. But you can say, yeah, sure, the bonds moved a bit on that one. And I just want to bring this up because this is where the rubber kind of meets the road. Is that, you see a marketplace, as I said, that's just euphoric to the upside. We're at all-time highs in the S&Ps. We're at all-time highs inside of the NASDAQ, okay? And yet you're still facing this incredibly sketchy, right, bond market and interest rate issue. Now, I've brought up the interest rates substantial amount, but more than that, here's what I'm kind of calling into question, and we're going to get some answers early next week. This, okay, hideous move to the downside in the bond market, okay? So now we're on this bounce, if you will. And at this point, I mean, this is the dynamics of trade, right? Markets sell off, they bounce. Markets sell off, they bounce. Markets sell off, okay, they bounce. Question is this thing going to continue to lift, or are we actually going to come right back off? Okay, and I'm going to tell you, okay, without hesitation over here, you can look at all the technicals you want. Okay, just take a look at the bonds, if you will, on a 3-year. Does that make you feel warm and fuzzy about where we are? I'll zoom in a little bit more. But, when you're zoomed in, I mean, when you're really zoomed in, you're like, well, this could, and then you zoom out a little bit and you're like, well, I don't feel it all. Because, I mean, easily this thing could be trading, 105, 110 in here. I mean, things could get crazy and crazy in a hurry. So you start looking at aspects like, some of the interest rates associated with this. And again, this is not a pretty picture. What you're actually looking at now is the 10-year interest rate. And the 10-year interest rate from 3.6 straight up to almost just shy of about 4.5%. So it pulls back a little bit. Okay, that's great. But you get over 4.5% this next week, and I'm going to tell you right now, markets are going to scream in pain. Okay. What we have to look at this point is this is almost like this crash situation where you're getting that quintessential rip your face off rally, and we might go into another bout of sell side activity. Again, from my perspective, where we sit right now is exactly that. I would look for more sell side activity in the bond market. Okay, maybe, just maybe we start talking about like austerity measures in the U.S. Right now, the bond vigilantes are still out there and they're still selling, okay, the bond market. I don't care if there's like this 2-day, rip and bounce over here because you've got this euphoric rally going on in the marketplace. This is sketchy, this is dangerous, and I think we're going to see some follow-through, specifically follow-through, okay, in some bond sell-side activity, okay? The question is, at what point the bond selling put pressure into not just the S&Ps, but specifically big NASDAQ stocks. And in my estimation, it has to do with that 10-year and the 10-year hitting 4.5%. I think that's, when it comes to interest rates, it's always difficult to actually put a number to it. It's a nice big round number. I think everybody realizes if that 10-year hits 4.5%, okay, it's a big number. That's scary because all you keep hearing about is the Fed cutting. Right? And the Fed just cut again. They cut, who cares? 25 basis points. And when they cut 25 basis points, what does this week look like? I mean, really, like, what does this week look like? So you've gone through this entire week where we're talking about, the election, then we're talking about, of course, the marketplace and the interest rates associated with it. Okay, what does the end of the week look like? And survey says, okay, the interest rates are down very, very mildly on the week. Okay, but net rates are up massively. Okay, massively since mid-September, and that is one of the key takeaways over here, because it's this bond sell-off kind of threatening, if you will, the euphoria of these S&Ps. And in the end, I'm a big believer that the bond market can win if the bond market actually continues to see sell-side activity, and there's a big if. All right, so cancel the Fed, because the Fed didn't really make a difference over here. The bonds got a little bit bid, but those rates are sketchy. Now, earnings flips. As you guys know, I've been trading a tremendous amount in and around earnings. Did it again this week. Hit trades over here in like DraftKings. Okay, both DraftKings and of course Take-Two. Take-Two, I think it was 118% return in that one. DraftKings is 182%. I mean, look, these are the trades that I'm doing a lot right now. By the way, take a look. Earnings flips. I have a class coming up. It is this coming Tuesday, okay? This coming Tuesday. That's going to be November 12th. If you actually follow over here to TheoTRADE.com, again, TheoTRADE.com/flip. If you're interested in doing, okay, these earnings flips trades, I'm telling you, watch this video. Watch this video. The earnings flips, okay, again, they have been phenomenal. There's so much liquidity in and around these earnings and earnings, okay, related trades, but we've had a really good streak. Intel 143%, Apple 182%, Amazon 340%. I mean, all of these are within 24 hours. So if you want to know a little bit more about it, again, as I said a moment ago, TheoTRADE.com/flip. And by the way, this is not just a class coming up here on November 12th. There's so much more. There are alerts with all of these. Again, TheoTRADE.com/flip. Now, back to it. Look at this. The bond's actually going to close here up a full point. As I said, it's that kind of quintessential rip your face off rally after a significant decline. And if anything, that's actually got me more concerned, because that, there's some of the closing bells over here. Again, I'll reiterate, this looks to be, if you will, the hallmark, okay, of horrendous sell-side activity. And the hallmark of horrendous sell-side activity is that quintessential, as I said, kind of rip your face off rally, and that's does appear what we are seeing. So we're getting this big volatility crush. Let's cruise back over to the SPX. It's big volatility crush. The marketplace explodes to the tune of, wow, just shy. I mean, a few points shy, if you will, of a full-blown 2 standard deviation move. Okay, but taking a look at the SPX. Now, the SPX hasn't totally settled out. The options have not totally settled out. These options are open 15 minutes after the close. And we just heard the closing bell over here. We're looking, okay, somewhere around an $81 expected move for next week. Now, just hold on a second, okay? I realize we just came out of a week that had an election. We were plus or minus basically $151. This next week, we're looking at about an $81, okay, expected move. People, that is a massive vol crush. I'm going to tell you right now, I would take the over on this. I would definitely take the over. What, you think you can't move $81? Okay, you had a single day where you're moving like 130. And again, you're like, well, there was an election. Well, next week, there are enough catalysts in this tape, okay, including like CPI, that could really generate some substantial movement, okay, against this marketplace. Because I don't care about CPI initially moving the S&Ps. I care about CPI rocking this bond market, okay? People, pay attention, pay careful attention. I'm a strong believer. The bond vigilantes, they're out for some, vigilante justice, if you will, inside of that bond market. You got to pay careful attention, because at some point it does, okay, have a critical impact back to those S&Ps, because we're just a few bond points shy of crushing those S&Ps. I think one of the best ways to take a position in that is long volatility at this point. Thanks everybody for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.